Welcome back to another episode of Tank Talks. On this week's episode, we skip the interview and go right to the weekly rundown show with John Ruffalo. Thanks for jumping back in the tank today, John. Let's get right into it here. So Cohere is one of Canada's best-known startups, also known to be competing with OpenAI and all the foundation model builders out there. And obviously, the fundraising environment for them still continues to be frothy, with talks of over $500 million being invested in the company at a $5 billion valuation, with talks of also being led by PSP, which is the public service pension plan out of Quebec. I think the valuation versus multiple of current annualized revenue is one thing to talk about. And the other thing is obviously having a Canadian pension fund rather than a strategic leading an investment round like this at maybe more than 450 times ARR. So what are your thoughts on this?
I was thrilled to hear this in that, number one, let me address the pension fund issue. If there's any investor that has a very long time horizon, has significant capital that could be there for the long haul as a pension fund. And, we've been hearing about the pension fund debate on helping support Canadian-based startups. So one's come to deliver, which I think is great news. The second thing is kind of to your first question. You and I had talked about this maybe 6 months or maybe more than that, 12 months ago. We said that the LLM infrastructure, the rule of three will operate. Let's just presume, just for the moment, that maybe two of those slots are taken by Microsoft and Google. And what's starting to shape up is there might just be one, maybe two more slots left after that. And Cohere and Anthropic seem to be the next two that are dueling it out. So this is a great opportunity for Cohere to stay in the game. And they have a very, very differentiated strategy. So let's see and let's cross our fingers. Such a great organization.
Great Canadian story that we're all rooting for, obviously. I guess when you say the rule of three, are you defaulting OpenAI to being Microsoft? Is that what you're saying? So they're not the third?
Yes. Did I implicitly say that? Anybody who thinks otherwise has got their head buried in the sand.
Right.
It's Microsoft and Google. And then the third player. Now, the interesting strategy on Cohere still is to be the independent, non-affiliated strategy. One might argue that Anthropic is too connected to either Amazon or Salesforce, as an example.
Right. Okay. And is your belief that Cohere is the most independent because they don't have the biggest strategic? I mean, they have strategic investors. Inovia led their Series C, but not a strategic, just a traditional investor. Now you've got a pension fund. But are you saying because nobody owns more than like a third of the company?
Yeah, on the other ones, Google is Google. OpenAI, I am making the presumption it is Microsoft. So it's really, who are they ultimately serving? Who is their master? And from a Cohere perspective, there is nobody, at least yet, who they're serving as their master. And I think that might be an appeal to those who don't want to be affiliated with a particularly large tech company.
Right. Yeah. Well, maybe speaking on Canada's AI, race here to be in the top three, there has been a lot of talk around how the government needs to be spending billions of dollars on building out the AI infrastructure to be able to compete. People from across the AI ecosystem are calling on Ottawa to spend at least $1 billion to start, maybe up to $10 billion over a number of years just to catch up. For all of the costs associated with supercomputers and GPUs and things like data centers. What are your thoughts on, again, going back to the government to step up and foot the bill initially to kickstart this ecosystem?
I love it when the government plays in roles that only the government can take care of. So the AI talent issue, right? Dealing with, say, immigration and education. That is something that the private sector cannot do, and that's where a government needs to step in. When you start talking about the government running an AI program, I sort of query and saying, so what exactly do you really want them to do? If you want the government to help support a company like Cohere from a strategic perspective, I could accept that because that becomes an access to capital issue. But having the government in the business of AI, I really want people to step back a bit and say, okay, do you really think that's going to be a strategic advantage for Canada if the government steps in?
I completely agree. I think we have enough capital in the private markets to build data centers, to build supercomputers. Maybe you offer them tax incentives or the ability to amortize cost over a 25-year period. There's so many different ways than having them be the piggy bank to kickstart something like this. I totally agree with you. And I hope that we have at least some people in Ottawa that understand that it's okay to push back, but offer some form of maybe compromise that doesn't cost the government tens of billions right at the start without anything to show for maybe a few years in.
Right. Either set the conditions right for success, or B, stop funding foreign-based companies to compete against the Canadian ones like they did on the battery. Spending $13 billion to support a tiny number of jobs when we have some great Canadian-based battery technologies. Don't suck and blow. Do one or do the other. And yet it seems to be don't support Canada. Oh, and by the way, support the foreign. That's where you have a completely misaligned public policy.
Yeah. Speaking of public policy, we actually had a headline come out the other day where 4 school boards in Canada filed a lawsuit against Meta, Snap, TikTok, and parent ByteDance, claiming that these social media platforms are harming children, which we all can agree with and is pretty undisputed. But in the suit, there's the Toronto District School Board is charging that these social media companies are deliberately seeking basically to attract students to their platform and forcing harm on them through financial and other human, distress. The price tag that they've thrown on this, I don't know how they come up with it sometimes, is 4.5 billion Canadian, so 3.3 billion US in damages. The other school boards that joined the filing through the Ontario Superior Court are the Peel District, the Ottawa Carleton District, and the Toronto Catholic District. So, what are your thoughts on this? Will this go anywhere? And we've also saw the news that happened in Florida as well, where I think DeSantis is banning anyone under the age of 14 from having access to their own social media accounts.
And there's a number of other school boards in the United States who have already done this. First of all, let's get this out of the way. I do believe that social media has been a big problem, particularly for mental illness issues, particularly amongst young females, is disproportionately higher than it is on young males. But both of them, it is an epidemic. So let's get that out of the way. It's a real serious problem. Now, let's talk about, the suit. Again, I'm no lawyer, but what it feels like to me is a little bit of grandstanding from these boards of education. Why don't you work with governments if you want, just like they did with cigarettes? Maybe what you do is you incentivize things that you want and you tax the crap out of things that the society doesn't want. Maybe that's the route. But I found this was a grandstanding move, largely from an organization or organizations that are so inefficient and are part of the problem in many of the education for our children, in that they spend so much of their time on the administration and so much of our cost is on the administration. Hey, folks, why don't you spend your time in actually helping the kids and getting teachers in the classrooms and supplies in the classrooms? But no, this is going to, I am sure, has committees of people all over this.
Yeah, that cigarette example is a perfect example. It's like going after the convenience stores selling the cigarettes rather than the actual tobacco manufacturers or the cigarette manufacturers and the nicotine manufacturers, right? The problem with going after these platforms is that they are always protected by the newsstand law, which basically says they're just the provider, the platform where other people's content comes and gets produced and shared. They're not actually curating, which I totally disagree with. And they're not also the ones creating, which I totally disagree with. But that's what they claim. Until you break that down, you're not going to be able to go for the guts of the organizations. And so until you get access to the algorithms, until you get access to understanding how they're choosing which content to serve, which age groups, I think YouTube's done a pretty good job at this, which is always interesting that they never get caught in some of these headlines. Right? It's always Meta and Snap and TikTok, ByteDance, but you never see YouTube and Google sometimes, right? Interesting.
It's interesting. I never thought about that, but yes, it's interesting.
I know that, I have young nieces and nephews who spend tons of time on YouTube Shorts and everything, but I think what YouTube has done a fantastic job of is building in the guardrails and allowing there to be a lot more protection of minors on their platforms than some of these other platforms have. And, maybe that's why they're not always called on these lawsuits.
And Matt, just a day or so ago, I was listening to one of the big technology podcasts, the Joe Rogan Show. And there was a guy on there who has been researching this very issue and looking at ways to solve this particular problem. One I thought, and he had a whole list and they were very interesting. One was interesting, identity software, right? So if you look at LinkedIn, for example, where you can verify who you are, why isn't this in all of the social media for the kids? All they got to do right now is just simply tick off a box that I am 18 or I'm over 13 years old, but truly having identity in there. And it doesn't need to be disclosed to the public, but the social media players do not want to do this because it will massively decrease their audiences. So technologies like that would be fascinating to me.
Just follow the breadcrumbs. If they're, asked to verify their users, then their users are not verified. Therefore, they lose their daily active users. Therefore, they lose their subscribers. Therefore, they lose their advertising dollars, and that's what pays the bills. It's very easy to figure out where it all leads to. Speaking of money, we've got another Canadian public tech company being acquired by a mixture of private equity and the actual founders. So Advent International, along with the CEO and chairman of Nuve, Phil Fayer, and Novacap and Case Depot, CDPQ, have submitted an offer to acquire Nuve for $34 a share. This was announced a couple of weeks ago in mid-March. Still has to be approved by the courts and regulators, but the offer is around a 50% premium to Nuve's 90-day VWAP price. And, Case Depot, a private equity firm with Novacap, and the CEO are teaming up with a well-known private equity firm to acquire the company. What are your thoughts on this one? Another one bites the dust.
You mentioned it is a premium on its 90-day trading value, but it's well below its IPO price. So what it looks like to me here, and again, I have no knowledge of it, here's a company that went very high on the IPO, could not recover back, and perhaps this was an opportunity to buy it back at a relatively sizable discount from the IPO and restart it again. What I don't really know is, why was the stock price flatlining and decreasing over the last little while? Was it a quality of earnings issue? Was it a liquidity in the markets issue? I don't quite know, but it seems like it's rather opportunistic.
I mean, look, it adds to a growing list of companies that go public from 3 to 4 years ago, or mid 2020, that had obviously a huge run up after the IPO and then a huge fall down from grace. And then have, the largest shareholders often band together and say, this is enough. We can't take it anymore. Let's build this thing in private. Let's remove the listing cost, the auditing cost, the compliance cost that goes straight to our bottom line. And let's build this thing in private. The other thing, too, is they're tired of seeing, 1% of their float trade a day and that closing price extrapolate the entire value for their business, which is not the realistic value. And the founders and largest shareholders say, look, if I could buy 95% of the business at that closing price, I would, but I can't because it's so illiquid. So let's just make a bid that's 50% higher than where the current markup is on the closing price. And that's still good for current shareholders who want to sell. And everyone who wants to roll can roll. We had the BPTV, Dialogue Health, Magnet Forensics, which well, MDF Commerce, Q4, True Context, the list goes on. So I think there's more. And one that actually is also making headlines, CEO or former founder and now CEO again, Dax Silva, said he was pondering the idea of taking Lightspeed private the other week on the news of Nuve's potential buyouts, saying, quote, makes you think, right? So I think they're all thinking it.
Yeah, and Matt, but here's where the difference on the Nuve one, though, is the ones that are being privatized that you and I had predicted way early on are really the orphaned companies, right? So call them certainly under $500 million, but I would say up to $1 billion. The issue was the liquidity of their trading, right? And they weren't really getting the fair value for their stock price. And then hence, what is the value of this stock currency you have? the part that confused me a little bit of Nuve was I think its market cap was $5 or $6 billion. It surprised me. What is the issue there? Is it the thinness of the trading, or is it the lack of performance? And if it's a lack of performance, which I'm thinking that's really what it is. Are they privatizing so they don't want the scrutiny of the public markets watching every single quarterly move?
Yeah. I mean, we did see obviously on the other end of the spectrum, people who are performing well are getting paid well, with Shopify CEO Toby Luque getting a $200 million options grant in February, one of the largest in Canadian compensation packages in Canadian history. I don't have a problem with this. I don't know why it always continues to grab people's heads, but 2.6 million options and close to 470,000 restricted shares is worth around 200 million. What are your thoughts on this?
I can't recall. Is Shopify based in Delaware? Because if they are,
you better watch out.
Don't cash in your stock. I think that was the most ridiculous decision against Musk, whether you like it or not. But having the courts coming in
for someone who had 9 shares, John, 9 shares who filed the lawsuit. Come on.
Yeah. I think it's great. So great for Toby. You have to assume that the board is sophisticated.
That's why you have compensation committees.
Yeah, and I remember when Elon Musk did this, I thought, what the hell? This is a ridiculous.
So did every other CEO in the world. No one would have signed up for that package.
And then the guy pulls it off. And now you're like, oh, wait a minute. We overpaid you. Come on, folks. This is just about, this is children playing now in the market. So great for Toby. And I hope that he smokes it out of the ballpark.
And last but not least, speaking about someone who didn't smoke it out of the ballpark, but spoke maybe a little too much inside the ballpark, is FTX founder Sam Bankman-Fried, sentenced to 25 years in prison for the massive fraud and conspiracy that doomed his cryptocurrency exchange and related hedge fund. I guess the question is here for you. One, do you think 25 is enough? Prosecutors were asking for 40 to 50 years. Obviously, it looks like, Judge Kaplan is trying to make, a model out of FTX founder and a bit of a message to everyone else in the crypto industry that's trying to commit, scams and frauds, that this is not going to fly. So first question is, do you think it's enough? And then second question is, what are your thoughts on how everyone is going to be getting paid their money back? And maybe even investors, because of all the incredibly sophisticated early investments that SBF made while running FTX.
So a few things. Do I think that was fair? Look, the guy is 30-ish years old and is going to spend at least the next 20 years in prison. He's going to come out, he's going to be in his early 50s. That's a pretty good price to pay. I thought that was a fair result. If he was, 3 or 4 or 5 years, I thought that was absolutely ridiculously light. Will it send the right message to the sector? Who knows? If one's a fraud artist, this won't deter them. I mean, on the positive side, he's going to have free haircuts for the next 20 years in prison, so he doesn't have to worry about that. But, the one comment was the investors getting their money back. Well, they're not getting their crypto back. They're getting the cash equivalent at the time of their investment. And the crypto has moved up, I don't know, it was 166% from that day to now. So they're not getting their money back. So there's a little bit of a narrative issue. And the CEO, John Ray, made it very clear to the judge that was absolutely bullshit, number one. And number two, now, who knows, but they said that if it wasn't for the efforts of the rescue team coming in and figuring all this out, people wouldn't have got their money back.
I think that's a little bit that, John. Yeah. Come on. These guys are charging $8 million a month in retainer. Come on.
Yeah, I think he's tooting his own horn on that one. But the fact that you're getting the cash equivalent versus the actual crypto.
Look, I mean, they're selling a seed investment in Anthropic. They're selling for $875 million. He made investments in Solana. He made investments in Robinhood. He made some really interesting, maybe lucky, early stage investments. And then the Bitcoin and Ethereum, whatever crypto they were still holding through the liquidation, will go back to pay all the depositors. And yes, will Sequoia recover all the money they put in? Probably not, but they wrote the thing off to zero. So it's better than a zero.
Yeah, but I guess, Matt, you can go rob a bank, take the proceeds, go into the stock market and go and make a profit on that and give the money to the bank. Say, oh, no harm, no foul. It's still illegal. And I think that's the point.
That's the point. And I think also the reputational damage to the investors who did have this on their pitch decks will also not be recovered, even if they recover some of the losses from this deal, which is the main point here. You never want to have a company that you invest in as an investor on the front page of the Wall Street Journal for fraud, no matter how it ends up, right?
No.
Awesome.
No.
All right. Thanks, John. Until next time. Thanks for jumping the tank.
All right. Thanks, Matt. All right. Take care.
Hey, everyone. Thanks for tuning in to another episode of Tank Talks. We hope you found today's conversation as insightful as we did. If you're enjoying the show, we've got 3 quick things to ask of you. First, hit that subscribe button on your favorite podcast platform so you never miss an episode, whether that's Apple Podcasts, Spotify, Google Podcast, or YouTube. Next, follow us and stay up to date on upcoming episodes and behind-the-scenes content on social media with Twitter, LinkedIn, and Instagram. And lastly, share the love. If you found value in today's episode, share it with a friend or colleague who'd benefit too. Your support helps us bring in more amazing guests and keeps the Tank Talks engine running. That's it for today. Until next time, keep disrupting and innovating.